Hello and welcome to the show. I'm Puneet Wadhwa, and today we have with us Gaurav Ratnaparkhi, Head of Technical Research at Sharekhan by BNP Paribas. Hello, Gaurav, and welcome.
Hello, sir. I'm fine. How are you?
So the market seems to be stuck in a range. How do you see the Sensex and Nifty play out in the short to medium term? What are the key levels that you are tracking on these indices?
Yeah, as you rightly pointed out, the Nifty and the Sensex are stuck in a consolidation for last few weeks, and I think this consolidation can go on for next couple of weeks as well. Basically, on the higher side, both these indices are facing resistance near their crucial daily moving averages as well as near a falling trend line. So, as far as Nifty is concerned, the resistance is placed at around 18,000. Till the time Nifty trades below the level of 18,000, the consolidation can go on in the range of 17,500 on the downside to 18,000 on the upside. So this 500 points range is expected to be there for next couple of weeks. And once this consolidation is complete, then the Nifty will be set for a breakout on the higher side, and eventually it can surpass the level of 18,000 and head higher. And as far as Sensex is concerned, the corresponding level is 61,000. So till the time Sensex trades below 61,000, I'm expecting a consolidation which can take place in the range of 59,500 to 61,000 for next couple of weeks, post which a fresh breakout can be expected.
What about banking stocks, Gaurav? What are the key levels for the Nifty Bank Index that you are tracking?
Yes, so if you look at the recent structure, I mean, for last few weeks, then the structure has been more or less similar to that of Nifty and Bank Nifty. Basically, Bank Nifty is also witnessing oscillations near its crucial daily moving averages and is in a range-bound mode and is still unable to break out of that range and start a fresh move on the higher side. So as far as Bank Nifty is concerned, 42,000 has been acting as a stiff barrier. Despite of multiple attempts, Bank Nifty could not surpass that barrier of 42,000, and the consolidation, which can continue for next week or two, is likely to take place in the range of 40,000 to 42,000. So this 2,000 points kind of range is there for Bank Nifty, but nevertheless, buy on dip should be the strategy from trading perspective for short-term traders. And as far as the individual stocks are concerned within the banking space, HDFC Bank and Axis Bank, these two stocks are looking attractive. Yes, there is possibility of some consolidation in the next session or two in both these stocks, but that should be used as a buying opportunity. So as far as HDFC Bank is concerned, I'm expecting a target of 1750 on the higher side, and for Axis Bank, the target will be 940, and the time frame will be around a couple of weeks.
Adani Group stocks have been in the limelight since the Hindenburg report came out in the last week of, towards the end of January. What do charts indicate? Is there more pain in store for them? One. Two, is it a good time to bottom fish in a hope that probably they'll recover 6 months down the line?
So if I talk about Adani Group in general, I would prefer to stick to two stocks, Adani Entertainment, Adani Enterprises and Adani Ports. So basically there is a fair amount of clarity in these two stocks as compared to the other stocks. In other stocks, there can be prolonged correction or a consolidation that can go on for next couple of months or so. But as far as these two stocks, Adani Enterprises and Adani Ports are concerned, the lows which we have seen recently, I think they have pretty much bottomed out at those lows. And for Adani Enterprises, the low was around 1017. So I'm not seeing that low getting retested in near future. And in fact, any minor degree dip from current level will be taken as a buying opportunity. So if we get a dip in the range of 1500 to 1550, that should be taken as a buying opportunity for Adani Enterprises. And on the higher side, 2600 will be the target to watch out for. For Adani Ports, the structure is more or less similar. We already have seen a bottom in place at around 395, and I'm not expecting that level to get breached in next few months or so. So from that perspective, any dip towards 520, 510 will be a buying opportunity for Adani Ports. On the higher side, the stock can retest its crucial daily moving averages, which are placed somewhere around 640. So there is a buying opportunity in both Adani Enterprises as well as Adani Ports are concerned. Others, I would suggest to stay away till the clarity emerges.
Okay, we already spoke about banks, Gaurav. How do investors approach the other two rate-sensitive sectors, auto and real estate? Are there any plays that you like in these two sectors?
Here, I would like to stay away from realty. The realty space can have some more downside pressure. At least they can be in a range for next month or so. So I would stay away from realty pack as of now. But yes, in the auto pack, there is definitely a buying opportunity, especially if you look at stocks like Bajaj Auto and Eicher Motors from two-wheeler pack. They have a decent 6 to 8% kind of upside potential from current level in the short term. Even the auto ancillary stock, Bharat Forge, is showing pretty attractive structure. It has seen a good amount of consolidation and is now on the verge of a fresh rally, which is around the corner. So Bharat Forge can also deliver around 10 to 12% kind of upside potential in the next couple of weeks. And as far as four-wheelers are concerned, I would suggest Maruti is one stock which can be considered as a staggered buying opportunity. One can accumulate the stock in the range of 8,700 to 8,800 and look for an upside potential of around 8 to 10% over the next 2 to 3 weeks.
The Aero India show got underway recently, Gaurav. Are there any defense-related plays that one should look at, let's say from a 6 to 12 month perspective?
Yes, definitely. I think HAL and BDL, these are the two stocks one should definitely look at. After a prolonged rally, these stocks have seen a correction and also have been hovering around in a consolidation manner, but that should be used as a buying opportunity. I think both these stocks, if you are talking about time horizon of next 6 to 12 months, then definitely both these stocks should be there in one's portfolio. And I would definitely suggest buying these stocks. Even if you are a medium-term trader, if you are buying for a month or so, definitely both these stocks are providing good opportunity at current level.
What's your broad view on the mid and small caps? Do you like anything from these two market segments?
Yes, so as we discussed about the large caps, where the consolidation can be for next 1 to 2 weeks, the mid cap and small cap sectors can continue to witness prolonged consolidation. Basically, both these indices are in the process of forming a triangular pattern, and that pattern is still in formation. The last moves in these patterns are still in formation. So that indicates that there can be prolonged consolidation, which can last for a month or so. 1 to 1.5 month kind of consolidation can be there in both these indices. So the time is not yet ripe to get into mid cap, small cap space. After a few weeks down the line, probably there will be setup where one can consider getting into these sectors.
IT stocks, the IT sector is back in limelight again, given the fact that leading IT players are going slow on hiring, at least the campus recruitment bit. What do charts indicate regarding these two stocks? Are there any stocks, worthy of investors' money at the current levels from a medium to long-term perspective?
Yeah, again, when it comes to IT pack, I think we have already seen a bottom in place, and what we are seeing in last few sessions is nothing but a minor degree correction, and that is providing opportunity for one to align on the long side. So it is better to stay on the long side of the trade as far as IT is concerned. And both the large caps, Infy and TCS, both are showing very attractive setup. Buy on dips will be the strategy in both these stocks. Any correction, couple of percentage point correction should be used as a buying opportunity. And after that, the stock is expected to resume. Both these stocks, in fact, are expected to resume their larger uptrend and can have around 15 to 16% kind of upside potential over the next couple of months.
Purely from a market strategy viewpoint, should one use the rallies to exit or should one use the dips to buy?
I think one should use dips to buy. From index perspective, 17,500 will be the level where one should start accumulating. And from Sensex perspective, it is 59,500 as a crucial support level. So any dip towards this support, I would be looking to buy and add more on the long side.
Thank you, Gaurav, for your time. We hope to see you soon.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.